All right, welcome to today's Technical Tuesday. My name's Karl Eggers, and you can always find our information on eggerscapital.com. So today we're going to go over 4 charts. A couple of them are interesting to see right now as potential investment opportunities. A couple of them I'm showing you as really lessons for things to look for in future charts. So when you're looking at these charts on your own, these are just some good guidelines. The first one we're looking at is the Bitcoin Investment Trust, GBTC. Of course, many of you are familiar with what's going on with the price of Bitcoin. This is one of the few ways people can invest in it, or probably the easiest way is to buy this investment trust, GBTC. Now, the problem with it is that it trades sometimes at a significant premium to the actual price of Bitcoin. So sometimes you're paying almost double to buy this particular investment trust. So just be careful of that. There have been times where this has gone down and the price of Bitcoin has actually gone up. So be very careful, but I am showing this to you because today the CME came out and said they're going to start, I think in the fourth quarter, creating Bitcoin futures so people can actually invest in Bitcoin futures. So naturally this got a pop of about 14%, essentially making it easier for people to invest in Bitcoin. And technically right now this is technically it's an interesting chart. Of course you have the kind of these moves and then consolidation and move and then consolidation. It looks like it might be taken off for another run here. You can see the Bollinger Bands, I'll take this off, kind of squeezed, and you can see how tight they got, and now it's broken out of that. So look for GBTC to probably test this old high, maybe. I mean, shoot, this thing's sitting at 827. Wouldn't surprise me to see it go up to the $1,000 mark. Also want to draw your attention to the small caps, the Russell 2000 small companies. And really what we saw yesterday was a sell-off, a significant sell-off in the small caps, over 1%. And it happened right when there was talk that the corporate taxes might, instead of dropping them to 20%, this year or next year, it would be phased in, and small companies are the ones who really benefit from tax cuts the most, and so they sold off. And then of course President Trump said no, that's not going to happen, and so they rebounded today up about, almost got back everything they lost yesterday. But as you can see here, I've been calling for a pause in small caps, and we've had that pause, but if you notice, instead of them falling back down or giving up, they've just moved sideways. And as they've done that, we've got, again, these Bollinger Bands getting kind of tight in here. So watch for this. The longer this goes without pulling back, it looks like it's wanting to kind of pause and then take back off again. So watch small caps, especially if we get more momentum with this tax reform, especially on the corporate side. All right, Tesla, TSLA. Of course, you're familiar with the company. And I've been putting some pictures out of Tesla the last few days, kind of showing that this thing looks like it might want to start kind of rolling over here. But if you zoom in a little bit, you'll notice this red line is the 200-day moving average. So we're at a really important inflection point in Tesla. You got this kind of support. You got the 200-day moving average. It bounced off it today up about 3% as we're going into the close here. So watch Tesla. Of course, we've got this. So Tesla could make a run to the high 300s. If it breaks, look out below, I think, because there's some fundamental issues going on, but purely from a technical standpoint, again, the thing I don't like is that this thing looks like it's wanting to roll over. So if it breaks, we could be at least doing some type of 50% retracement, which might take it somewhere down in this range and then perhaps bounce off of that. But it is constructive right now. It looks like it may be rolling over longer term, but it certainly has to hold these levels, I think. If it can hold this kind of 325, 330 range, I think we could see newer highs for Tesla. The last one, Micron, leading the NASDAQ 100 today, up about 6% on the day. This thing's been an absolute beast. And by the way, we do not own any of the symbols mentioned today, GBTC. We do own small caps, but we do not own the IWM. But small caps in general, of course, lots of people own in different ways. Tesla we do not own, and then Micron we do not own. Now Micron we did own, and I'm going to show you a longer term picture in a minute, but this is a good example of almost like the small caps I was just showing you. We have this run up, it moves sideways. You kind of get this consolidation in the Bollinger Bands, which get tighter, and then off to the races again. And you'll notice here on heavier volume. Now, this is a picture of the weekly picture of Micron. I want to show you something. This is really interesting. So Micron was back in 2013, just took off. All the big hedge funds owned it. It was probably the most loved stock, maybe besides Apple, but one of the most loved stocks out there. Everybody owned it. And then it started to kind of roll over. Had a pullback. We actually bought some, I believe, in this area after it pulled back. Fell some more, fell some more, fell some more. We actually averaged into the stock multiple times, at least 3 to 5 times in Micron. And it was interesting because we like the fundamentals, and sometimes when you get caught in what's called a negative feedback loop, things just get worse and worse. The news cycle's worse. People are exiting the stock. They're taking the tax loss, whatever it might be. And it became one of the most hated stocks. And in fact, I remember David Einhorn, who was a big bull, got bearish on it and said, well, he's basically capitulated and got out. And now it went on this big run again. So we had averaged into it, lowered our cost basis. We had a nice run. When it got up to about this 32 level, 31 level, we sold it. It pulled back a little bit, but you can see it's now at new highs, breaking out again. So a couple of lessons here. Number one is that sometimes these stocks give you an opportunity both on the upside and the downside. It was an overloved stock that deserved to come down, no question about it. But when it starts coming down, there's so many people taking profits, so many people betting against it that it goes over where it should be. It's overboard and it's overdone. And we saw that as this thing got down to about $10 per share. All it takes is a little bit of good news. We had some consolidation here, some double bottoms. We broke out, obviously started to turn the corner. And then this thing's now on this positive feedback loop where, I mean, it's just better news, better news, better news. And to me, yes, things have improved, but they haven't improved so much that a stock should go from 40 to 10 back to 40. And that's the opportunity that we have in the stock market. It's also the risk sometimes as well as these things move. But this is a great picture of something that really the weekly, which is what you're looking at, is a better time frame for the stock than the daily. The daily can really fake you out, knock you out of some stock sometimes. Look at the weekly for this one. But watch this as it's now broken out above the old highs. So I think this thing could go much, much higher. And again, we're out of it. We made really good money on it, but we are done with it. So just full disclosure there. But it's a good example of even fooling me, who I thought, okay, this thing's made a nice run. It may form this double top. You can see it started to roll over right here. Thought it was going to pull back a little bit, and it just has taken off from there. So locking in profits never hurts to do that, but even this particular one we could have made even more money had we held it, and this was in our aggressive strategy. So some of these things, it's a good lesson because sometimes you will own stocks. I mean, if you look at Micron, you own this stock and you buy it here and think you're getting a good deal. It falls, you buy some more. You buy some more, and so your basis may be right in this area, and it keeps going down further, and you're going, oh my gosh, what's going on here? And then lo and behold, it takes off. And look at this. This is from peak to trough to peak. You're talking 3 years. And those are huge percentages. So even though each day goes by slowly, if you zoom out for this thing on a weekly picture, a lot of stocks do this. They go from overloved to overhated. And Starbucks did it back in the day. Whole Foods did it back in the day. A lot of these companies that are fast growing, things slow down. Everybody it loves them, and then they hate them. And guess what? When you think about the stocks that are loved today, the Amazons of the world, the Netflix, even the Apples, they will go through periods like this where everybody doubts it. Apple already did it a few years ago. And then all of a sudden things turn around and there's nobody left to sell. And that's exactly what happened with Micron Technology. So that is your biggest winner on the NASDAQ 100 today, up over 6%, Micron MU. So those are 4 charts for you: GBTC, small caps, Micron, and Tesla. All right, guys, thanks for joining me. Don't forget, you can see on the screen all the ways to get a hold of us, follow our work, and we appreciate you following. Don't forget to subscribe to this YouTube channel if you aren't already doing so. Thanks a lot. Take care.